Welcome back to my morning report analysis videos with me, Rich Market Analyst at Hantec Markets on Wednesday 25th of October. Let's look at cable, and sterling has rallied strongly on the better than expected GDP data. It's about 45, 50 pips up on the day now, and that's rallied sort of around about 70 odd pips from that announcement as GDP came in better than expected. Let me show you. At 0.4% for the quarter and 1.5% year on year. So that was beating the expectations, and subsequently sterling has rallied nicely. Now it is still in this downtrend. Momentum indicators just drifting really. Yes, mildly negative on a correction, but just really drifting. And the market is basically pulling back to this sort of longer term trend, really, that remains in place. And above 30 big figure, you'd still say you're fairly positive, I think, on sterling. So it is just a little corrective move still within this longer term trend higher. But nonetheless, it has sort of had a bear candle yesterday, but today's positive move, certainly in the wake of that GDP data, has significantly improved the outlook that looked to be taking on a more corrective sort of angle. And it just depends on how far this market chooses to push it, because 3230 was a key level of resistance. Having been a pivot, it sort of then became the resistance that could potentially be a base pattern. Now, obviously, we had the sharp move to the downside yesterday, which sort of looked to be negating what seemed to be a building head and shoulders. But if the market again regains poise, it could still become what you'd sort of class as, I suppose, a double bottom if it then moves above 32.30. So there is still the prospect of a base pattern. It's just that the market is sort of having to react to yesterday's bear candle. So the market is still a little bit sort of choppy in the last few days, I suppose. And it seems to be moving around quite a lot on not only Brexit but also UK economic data now that would have an impact on the Bank of England's rate decision. So certainly this better than expected growth certainly helps the outlook for a possible rate hike, or a likely rate hike by the Bank of England. So the market's sort of finding support on the back of that. But you've got the higher low now at 30.85, above that 30.25, and now today's low at 31.10, leaving support again. So yeah, the market is a little bit choppy, but 32.30 is limiting as a pivot now, but a breakout above that would be a base pattern, but still sort of about 50 pips to go before we see that. But it'll be interesting to see how the market reacts throughout this session, because you've got durable goods later, which could certainly have an impact as well for the States. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.